Welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from a lovely Westlake Village, California. It's bright, it's early, it's Tuesday afternoon. We're going to jump into the market and take a look at Bitcoin, the stock market, the dollar. Make sure you smash that like button if you do enjoy some of the content. And starting it off with Bitcoin on the daily time frame, and we're about to close here in 41 minutes with, well, a bit of a, I don't know what you would even call that one, a little short stop, a little chaunch. I don't know exactly what I would call that one, but bullish engulfing fall. I would call it the side wage snail range. And what is going to be the bullish bias? What is going to be the bearish bias? I still actually think we're going to get one more push higher. Don't quote me on that one, but from what it's looking like right now, we get a short-term test down to about 92,885, and if that region can hold, we're still just in a bit of a range here. If we throw on our fixed range volume profile, you can see, yeah, that 93.1 or 93.2 looks like it's going to get hit. And the question is, can she hold? If we lose that level, the next level down, 91.95. And do I think it's going to hold? Probably not. Probably not. And we do get the test down to about 90,000 that we've been talking about since this rally has occurred. And why is that? Well, just in the greater grand scheme of things, oh, look at that, right at the value area high of the range. That is where you want to take your shorts. Not financial advice, not a financial advisor, but if volume can start to come in on this candle, let's see what the volume looks like. What does the volume look like? Can I get a little love here? By the way, if you want to learn how to trade, we got Crypt courses, Bitcoin 101, how to stack sats using technical analysis. Join us here for free for 30 days. Just click start here and get your free kind of entry-level tutorial on how to trade, what a stop loss is, what a candle is, what all the fun stuff is that you need to start trading. And then if you really feel lucky, you can sign up on BloFin and get 10% cash back on whatever you deposit. The link is in the description below. Highly recommend you start there. And by doing that, you'll get full access to the course, technical analysis, how to learn how to trade like a pro. There's, hours and hours of information there. Anyways, back onto the charts, and again, sideways range at the value area, high of the range. We're now leaving the bullish control zone with a drive of bearish divergence, giving us a shot down to the 9 exponential. So yeah, it does look like we want to test that region. I did sell too early. So I guess I'm going to have to enter more in on that position, which I've already entered in on anyways, and go for that test. Do we get a backfill on this daily? Probably. Going to get a bit of a backfill, and the 15-minute time frame is giving it away right now. Volatility is increasing, momentum to the downside in the bearish control zone. The hourly time frame is just beginning to, yeah, it looks like we're going to get a test in that region between 93.3 and 92.7. And yeah, so where can those pullbacks come and still remain bullish? I mean, technically, we're still making those higher lows, higher low. If we don't take out that low, still making higher lows. So that's a good thing. On the other side of the fence, any kind of a pullback into this region between 92.8 and, a higher low somewhere in that range, I mean, then we're just holding the range. We're just still ranging. The stock market has been rather healthy, and it is coming into a point of resistance here. You've got the VWAP, the green 55, holding us down. But to me, it looks like more upside. So tomorrow, the GDP numbers, remember Warren Buffett's favorite indicator, debt to GDP. He says, I've got one indicator I'm going to follow the rest of my life, and it's called debt to GDP. And surely, Temple, he says, I will follow that indicator to the day of my death. And what does that mean? Well, that means it's probably important to pay attention to it. Debt to GDP is way up there, 186%, although it's come down from the 90%. let's see, if we're on declining volatility, yeah, that looks like a sell region. So if we reject here and make new lows for the stock market, you would expect Bitcoin to do something like this, which we're looking at one more thread of a bounce to the upside, one more thread of a bounce to the upside back, somewhere around 96, which would be our official Fibonacci 618 level. I mean, are we front running the 618? It looks like it right now. But I wouldn't be surprised to see it even get as high as this if we get some good news tomorrow. My FX book for the economic calendar to see if there's any good news, bad news, indifferent news. That is the one you want to be watching for your major economic events. And tomorrow, is tomorrow GDP? Tomorrow, or is it going to be Friday? GDP's tomorrow. The expectation is 0.4%, last month 2.4%, so a big drop off. If we miss that and it's higher than expected, that's bad for inflation and could mean worse things for the Bitcoin price, and kind of fit in line with our narrative that, look, Bitcoin very likely swipes the lows one more time. And just reiterating my point here is that the golden pocket, the level to hit is coming in at 72,420. That would scare a lot of people and then give us the impetus for a run all the way up to the 1618 at 150. That would be nice if, that would be the bull market kicking back into gear and us all getting a little bit of love that we've been hoping for Bitcoin. Again, I'm expecting a rejection on the first pass here, and looks like, it's starting to happen. But if we do something like that, higher low above 96,000, or even a higher low right here, and then boom, back above 96,000, going to look very good for a run at the highs at the very least. So, precarious place for Bitcoin. Let's see if the momentum oscillators are giving us anything at the moment. Daily Stokes are crossing down, but they're in a critical zone. So that means we can get a cross back up in the blink of an eye. The 4-hour is saying volatility increasing, and the first pass in the bearish control zone, you'd expect a bounce. So we have been away from it for a few days, meaning that that first pass back in there, probably going to get a bounce, and then judge it from there on the 4-hour. The 4-hour does look rather droopy and down to 92,616. And then you got this big inefficiency candle right here. This one between 90,000. Yeah, probably going to get a bounce from there, to be fair, on the first pass. And depends on how severe that downside move is going to be. But right now, bears are taking control. The bearish divergence is in. Do we have bullish divergence on the other side? Yes, as long as we don't take out this low, because the price would be making higher lows and the RSI would be making lower lows. Hidden bullish divergence. This is a perfect sell signal. Perfect sell, almost. So I would be goosing the odds in the favor of the bears at the moment for a little downside action. The other thing everybody's talking about, the moons. The moons have printed a bear moon. So just for fun, let's take a look at the moons. The bull moon, the bear moon, what does it mean? It means that the gravitation is pulling the ocean one direction or the other. You can see the bull moon here, price goes down. So pretty darn good, accurate representation of what a bull and a bear moon. You can see this one pretty much failed right here. This bull moon failed, so it doesn't get it right every time, but go back and back test it, and more times than not, you get a little downside move when that bear moon hits. So beware, bulls. The bear moon is out to get you. And with that said, I'm going to be leaving. I will see you in the next one. Have yourself a blessed and highly favored day. Take care.